I think in the end, this will make great sense to people who have bought it for the right reasons. If you're buying it to get rich and get wealthy, you're going to be frustrated as hell. If you're buying it because you see that ultimately things are going to get very, very frightening before it's all said and done, I do believe that, whether it be with the banks, whether it be with the economy, whether it be with people hanging on to their property, whether it be with the accentuation of BRICS, whatever angle you're looking at it, the probability of these things happening are accelerating. And this is why I think the biggest money in the world has been making an overt and methodical push to accumulate gold and silver, using the Western suppression of price to run cover.
Banks are facing a tough environment in the wake of the Fed raising its benchmark interest rate to its highest since 2001, S&P said in a research note explaining the downgrade. Rate hikes have lowered the value of assets that regional banks hold and have forced banks to pay higher interest rates to depositors. S&P became the latest credit rating company to reduce its assessment of some U.S. banks on Monday when it lowered its ratings of 5 banks and put 2 others on notice for potential downgrades in the future. Andy Schectman, the CEO of Miles Franklin Precious Metals, points out the recent trends in demand for silver and gold following a slow period after banking failures. However, he believes a resurgence in demand in recent weeks, mainly due to concerns about bank downgrades and global economic issues. He highlights that while premiums on these metals haven't risen significantly yet, they have stabilized at deficient levels, presenting an excellent opportunity for accumulation given the current world scenario. The recent failures of Silicon Valley Bank and Signature Bank, 2 of the largest banks in the United States, piled on top of existing crises like inflation and the war in Ukraine, have raised concerns about the global financial system's stability. As investors search for ways to protect their wealth in these uncertain times, many look to precious metals, especially gold and silver, as a haven. Schectman emphasizes the changing landscape of interest rates and their potential to impact the economy. The Fed's target benchmark interest rates currently stand between 5.25% and 5.5%, their highest level since 2001. Last month, Fed Chair Jay Powell said the central bank would decide on further rate increases on a meeting-by-meeting basis. Schectman speculates that an environment of rising rates might lead to an economic implosion, with banks owning assets at significantly reduced values due to widespread defaults. Let's watch excerpts from Andy Schectman's interview with Arcadia Economics. Be sure to watch the entire video and consider subscribing to our channel. Remember to enable post notifications to stay updated on our latest uploads. Thank you, and enjoy the video.
The demand for silver and gold has picked back up in a strong fashion over the last few weeks. It was very slow for a period of time after the banks failed. So you had this lull between June and July and August, very quiet summer doldrums, they call it. But indeed, as we see more talk about bank downgrades, U.S. credit downgrades, getting close to, of course, today being the beginning of the BRICS meeting in Johannesburg. There's a lot of newsworthy items that have sparked people's interest again. And excuse me, while premiums haven't taken off yet, they've certainly stabilized, and yet stabilized at rock bottom, the lowest I've seen them in 4 years. You couldn't ask for a better environment to accumulate gold and silver in terms of availability, price, and premium, against the backdrop of a world that seems to be going upside down. I think you'll see premiums rise. I think you'll see demand rise. And when we talk about the banks, all it will take will be one bank failure with a bail-in. When the laws were written after the 2008 financial crisis, the Dodd-Frank law came out and said banks need to be bailed in, not bailed out. And as you continue to see this environment, as you mentioned, as the article said, higher interest rates and demand withdrawals. I mean, the average, that article basically said the average savings rate across the whole regional bank landscape, over 4,000 of these banks, is less than 0.5%. Why would anyone stay in a too big to fail, or in a bank that is not too big to fail, a systemically risky bank that Janet Yellen said most likely from now on will be bailed in, as they should be, where you're getting 0.5% in a savings account or 4% in a 1-year CD, when you can go directly to the Fed at treasurydirect.gov and 6-month treasury and get almost 6%, or you can go to a money market in a too big to fail bank with daily liquidity and get over 5%. there's no reason to stay in these banks. And I think you will see that be a catalyst for all sorts of problems. And, what happens when things really start to slow down and as rates continue to rise, you see the banks collapse as more and more people leave the banks in search of yield in a safer environment. And then you see an environment as rates rise where small businesses can't have access to capital, where they fail, where banks go under, where companies go under, people lose their job. And how do all of these people afford the maintenance of a 4% mortgage, or a $500,000 mortgage at 4%, which sounds great, but not when you lose your job. And when you see this type of environment with rising rates, which will foster an implosion in the economy and defaults, the banks then own everything at pennies on the dollar. It's very eerily similar to what Jefferson said: first by inflation and then by deflation, the banks will own everything. But think about that. Inflation incentivizes everyone to speculate and take on more debt. When I moved down here to Florida 2 years ago, $1 million mortgage you could have got for 3%. That same 3% mortgage, that same payment would only buy you a $400,000 mortgage today. So as rates continue to rise, as values finally start to come into equilibrium with the rising rates, you're looking at a massive implosion in this economy. And the question is this what they want? I mean, are they looking to blow up the economy and own everything as people end up having to default in greater and greater numbers? And I think that is what's coming next. And this is a very scary environment where we're not buying gold and silver to get wealthy.
Demand for silver, specifically the American Silver Eagle coin produced by the U.S. Mint, is alive and well. In another example of fierce demand for physical metals, bargain hunters, collectors, and retail buyers, we jumped into silver on the latest dip. The U.S. Mint reported it sold over 30 million Silver Eagles as recently as 2020. Over the past few years, there have been periods when premiums for Silver Eagles on junk silver significantly rose. Schectman emphasizes this trend and noted instances over the last 4 years where premiums approached double digits above the spot price for pre-1965 silver coins. Schectman warns about the possibility of impending bank failures and anticipates that these would lead to bank bail-ins. He stresses that money markets still invest in the overnight reverse repo market, even though there were rumors of this practice being halted to prevent mass withdrawals from banks. The discrepancy between the interest rates set by the Treasury and those in the overnight reverse repo market could strain commercial banks and contribute to a bank bail-in scenario. Let's get back to the interview.
There have been several periods of time over the last 4 years where premiums approach that of Silver Eagles on junk silver, where you're paying, well into the double-digit premium, $10, $11, $12 over spot for, pre-65 silver. And, I thought that was something I would never see. Indeed, we did. And look, I think one thing that also is making it, and ultimately will make it even more difficult to get pre-65 silver, is the laws that have been passed by all of these states, like Texas and Wyoming and Alaska and Idaho and Missouri and Oklahoma and Arkansas, all of these states that are allowing any legal tender coin, past or present, minted by a sovereign government, some just say US, most say any sovereign government, to be used as legal tender in these states for all debts, public and private, including paying your property taxes. And so pre-65 silver American Eagles, all of the things that are US based, I think will become harder and harder to get. And again, when I talk about this, the one thing that I'm thinking about, I'm looking 5 miles down the road, and that is what wakes up the public. And honestly, I think nothing will wake up the public more so than a bank bail-in. I talk to people, even people who are well-read and maybe just reading the wrong things, and they still don't know what a bank bail-in is. They have no idea that was written into law in the Dodd-Frank Act. And again, the fact that Silicon Valley Bank and Signature Bank were bailed out, of course, supposedly not at the expense of the taxpayer, again, made it very difficult for people to understand this. That was and should have been the exception, certainly. And, the fact that they were, I find it interesting. Few people talk about the fact, when we talk about Silicon Bank, by the way, 10 accounts had $14 billion in them. They were checking accounts for 3 years. I ask yourself, where the hell was compliance, risk management? Where was the FDIC? I mean, how is it that 10 checking accounts in this bank can have $14 billion in it, paying nothing, zero in interest, and 250,000 FDIC protection? I mean, who's managing this stuff? Why were they allowed to do that? And then, of course, they were bailed out. There's a fine line between conspiracy and reality, and you can look and find a conspiracy in everything. But I will tell you, I do believe in my soul that we will see some bank failures coming up very soon. Again, Fitch and Moody's, we told you so. And when they happen, they'll be bailed in. Janet Yellen said that. She'll say, we told you so. The fact that the money markets are allowed to invest still in the overnight reverse repo market, even though there was rumblings about them stopping that to quell the exodus out of the banks. The fact that the Fed or the Treasury has interest rates higher than that, and you see massive money coming out of the commercial banks, tells me that this is going to continue and put great strain on the banks. And there will be a bank bail-in. And when that happens, everything that we've talked about in terms of availability and low premiums being something that will change in the blink of an eye, it will. Because what that does is wakes up the mainstream into alternatives. And try and be objective. Really, try and be objective. Where the hell do you go in that environment? As rates continue to go higher, it puts more and more strain on the economy and the banks. Where do you go? And that's why I say he or she who loses least in what comes next wins. So yeah, I think junk silver is a great proxy for the demand of the market, and it's been slow in this market until recently. And I would expect that the first hint of a bank problem, you will see things like junk silver disappear, premiums go up, and the same thing could be said of American Eagles if past is prologue, if it continues to be the way that it was over the last several years.
More than a year of inflation, interest rate increases, bank failures, and market craziness have lured many other individual investors to precious metals. The precious metal recovers as investors seem confident that the Fed is not planning to raise interest rates further, but admit that rate cuts are unlikely to be under discussion this year. Are changing interest rates and bank instability signaling a more significant role for precious metals in safeguarding wealth? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.